Hey everyone, it's MKBHD, and today we're diving deep into a topic that's been making waves across the tech industry: tariffs, and more specifically, how they're shaking up the world of Apple. If you've ever wondered why your favorite gadgets sometimes get more expensive, or why companies like Apple are constantly in the headlines about supply chains, this is the episode for you. Apple, as you probably know, is one of the most valuable and influential tech companies on the planet. Their headquarters in Cupertino, California, is a symbol of innovation, but behind those glass walls, the company faces some very real challenges when it comes to global trade. Tariffs are at the heart of these challenges, and understanding them is key to understanding why your next iPhone might cost a little more. Let's rewind a bit. The ongoing trade war, which really picked up steam during the Trump administration, was all about putting America first. At least, that was the idea. The U.S. government imposed tariffs on hundreds of billions of dollars worth of Chinese goods, and China responded in kind. Fast forward to 2025, and the effects of those decisions are still rippling through the global economy, especially in the tech sector. These tariffs didn't just impact steel or soybeans, they hit electronics hard. For a company like Apple, which relies on a vast international supply chain, the stakes couldn't be higher. Every time a new round of tariffs is announced, it sends shockwaves through the stock market and forces companies to rethink their strategies. So, what exactly are tariffs? In simple terms, tariffs are taxes that governments place on goods imported from other countries. The goal is to make foreign products more expensive, encouraging consumers to buy domestic alternatives. But in practice, things get a lot more complicated, especially when you're dealing with products that are designed in one country, assembled in another, and sold all over the world. The idea behind tariffs is to protect local industries and jobs by making imported goods less competitive. But there's a flip side. Those extra costs often get passed on to consumers. That means higher prices for everything from smartphones to laptops, and it can even slow down innovation as companies scramble to cut costs elsewhere. For Apple, these tariffs are a really big deal. The company's products, iPhones, MacBooks, iPads, are all assembled in massive factories overseas, mostly in China. These facilities are optimized for efficiency and scale, allowing Apple to produce millions of devices every month. But when tariffs are slapped on those imports, Apple faces a tough choice: absorb the extra cost or pass it on to you, the customer. Why does Apple rely so heavily on China? It's not just about cheap labor, though that's part of it. China has built an entire ecosystem around electronics manufacturing, with skilled workers, advanced infrastructure, and suppliers located just minutes away from the assembly lines. Moving production elsewhere isn't as simple as flipping a switch. It's a massive logistical challenge that can take years to pull off. In response to the tariff storm, Apple has started exploring new options. They're investing in factories in countries like India and Vietnam, trying to diversify their supply chain and reduce their dependence on China. But these transitions are complex and expensive, and they come with their own set of risks and uncertainties. So buckle up as we explore how Apple is navigating this complex landscape of tariffs, shifting supply chains, and the ongoing quest to keep both its bottom line and its customers happy. The story of Apple and tariffs isn't just about numbers, it's about the future of technology, global trade, and the devices we use every day. Apple CEO Tim Cook recently revealed that Trump's tariffs are going to cost the company an extra $900 million in just the second quarter of 2025 alone. That's a hefty chunk of change, even for a company as massive as Apple. Cook didn't sugarcoat the situation either. He admitted that the tariffs are creating uncertainty and could lead to even higher costs down the line. It's a fluid situation, and Apple, like many other companies, is trying to adapt on the fly. So, how is Apple tackling these tariffs? The answer is a fascinating mix of strategy, innovation, and global logistics. Apple, as one of the world's most valuable companies, faces unique challenges when it comes to international trade. Tariffs can mean billions of dollars in extra costs. So Apple has to be nimble and forward-thinking to protect its bottom line and keep its products affordable for consumers. Well, they're getting strategic with their manufacturing. Apple isn't just reacting to tariffs, they're proactively redesigning their entire supply chain. This means looking at every step, from sourcing raw materials to assembling the final product, and figuring out how to make it more resilient and cost-effective. It's a massive undertaking that involves thousands of suppliers and millions of devices. Instead of relying so heavily on China, Apple is diversifying its supply chain. For years, China was the heart of Apple's manufacturing empire, but recent trade tensions and rising costs have forced the company to rethink this approach. Now, Apple is spreading its operations across multiple countries, creating a more flexible and robust network that can better withstand global shocks, whether they're political, economic, or even related to public health. Think of it like this: if you usually buy groceries at one store and suddenly their prices skyrocket, you might start shopping around, right? You'd look for better deals, maybe try a new store, or even split your shopping between a few places to get the best prices. That's exactly the kind of thinking Apple is applying to its global operations. By not putting all their eggs in one basket, they can avoid sudden price hikes and keep their supply chain running smoothly. That's essentially what Apple is doing. The company's leadership is constantly analyzing global trends, trade policies, and economic forecasts to make sure they're ahead of the curve. It's not just about saving money, it's about ensuring that Apple can keep delivering new products to customers around the world, no matter what happens on the international stage. They're shifting iPhone production to India, which has lower tariffs than China. This move not only helps Apple avoid some of the costs associated with Chinese manufacturing, but it also taps into India's growing skilled workforce and expanding tech infrastructure. By investing in Indian factories, Apple is building new relationships and opening up fresh opportunities for growth in one of the world's largest markets. Macs and iPads, those are being produced more in Vietnam, another country with a more favorable tariff situation. Vietnam has quickly become a key player in the global electronics industry, offering competitive labor costs and a government eager to attract foreign investment. By moving some of its production there, Apple is further reducing its exposure to trade disputes and creating a more balanced global supply chain. By spreading out its manufacturing, Apple is less vulnerable to disruptions in any one country. This global shuffle isn't just about avoiding tariffs, it's about building a future-proof supply chain that can adapt to whatever challenges come next. In a world where change is the only constant, Apple's approach could set the standard for how multinational companies navigate an increasingly complex global economy. Now, while Apple is looking overseas to mitigate tariff costs, the company is also taking a hard look at how it can strengthen its position at home. In a world where global supply chains are constantly shifting, Apple knows that relying solely on international partners can be risky. Trade tensions, political changes, and even natural disasters can disrupt the flow of parts and products. So, Apple is hedging its bets by investing heavily in its own backyard. They're also making significant investments right here in the United States. From its iconic headquarters in Cupertino to bustling innovation hubs across Silicon Valley, Apple is doubling down on American soil. The company is not just building offices and research centers, it's also expanding its manufacturing footprint, bringing more of its production process stateside. This means more opportunities for American workers and a stronger, more resilient supply chain. Remember that $500 billion investment we talked about earlier? That staggering figure isn't just a headline, it's a commitment to the future of American innovation. Apple is channeling these funds into a wide range of projects, from infrastructure upgrades to next-generation technology development. This level of investment is almost unheard of in the tech industry, and it signals just how serious Apple is about its long-term vision. Well, a big chunk of that is going towards building a massive server production plant in Texas. This facility is set to become one of the largest of its kind in the country, and it's designed to support everything from iCloud services to the backbone of Apple's digital infrastructure. The construction itself is creating thousands of jobs, and once operational, the plant will employ a highly skilled workforce, further cementing Texas as a tech powerhouse. On top of that, Apple is pouring $19 billion into making chips in America. These aren't just any chips. They're the advanced semiconductors that power everything from iPhones to Macs. By manufacturing these critical components domestically, Apple is reducing its dependence on foreign suppliers and ensuring greater control over quality and security. This move is also helping to revitalize the American semiconductor industry, which is crucial for the country's technological leadership. Chips are the brains of our devices, so this is a big deal. Every smartphone, tablet, and computer relies on these tiny pieces of technology to function. By investing in chip production at home, Apple is not only safeguarding its own supply chain, but also driving innovation in the broader tech ecosystem. This means faster, more powerful devices for consumers and a stronger foundation for future breakthroughs. These investments aren't just about avoiding tariffs, though. They're part of a much larger strategy to secure Apple's future in an unpredictable world. By diversifying its operations and investing in American talent and infrastructure, Apple is positioning itself to weather any storm, whether it's a trade war, a global pandemic, or the next big technological shift. The company is sending a clear message. It's committed to being a leader not just in products, but in economic resilience and national security. They're also about creating jobs and boosting the U.S. economy. Every new factory, research center, and innovation hub means more opportunities for American workers, from engineers and designers to technicians and support staff. Apple's investments are helping to build a stronger, more dynamic economy, one that can compete on the global stage and deliver lasting benefits for communities across the country. Despite the challenges posed by tariffs, Apple's business is still going strong. In fact, their revenue and profits both grew by a healthy 5% compared to last year. That translates to a whopping $95.4 billion in revenue and $24.8 billion in profit. Not too shabby, right? This growth shows that Apple's brand remains incredibly powerful and that people are still willing to shell out top dollar for their products. Speaking of shelling out top dollar, Apple saw particularly strong sales in the Americas, with an 8% jump compared to last year. This means Americans are still snapping up iPhones, Macs, and all the other Apple goodies. It suggests that, at least for now, any tariff-related price increases haven't scared off U.S. consumers. While Apple enjoyed strong sales in the Americas, things were a bit different in China. Sales in Greater China, which includes Taiwan, actually dipped by 2%. Now, this dip isn't entirely surprising. China's economy has been slowing down, and the trade war with the U.S. certainly hasn't helped. It's worth noting that when you factor in currency exchange rates, sales in China were actually flat compared to last year. Still, it's a sign that Apple might be facing some headwinds in the Chinese market. Despite the cost pressures from tariffs, Tim Cook has maintained that Apple is committed to keeping its products affordable for customers. He's downplayed the idea that tariffs will lead to significant price hikes. Now, only time will tell if Apple can truly absorb these costs without passing some of them on to consumers. But for now, it seems like they're prioritizing customer satisfaction and market share over short-term profit maximization. So, there you have it, Apple's 2025 Tariff Tango in a nutshell. They're facing significant costs due to tariffs, but they're adapting by diversifying their supply chain and investing in U.S. manufacturing. It's a delicate balancing act, but so far, Apple seems to be navigating it effectively. They're still churning out impressive profits and keeping customers happy. The big question is, how long can this last? As the trade war continues, it remains to be seen how it will impact Apple and the tech industry as a whole in the long run.